You're the owner of a small business, which means you're also the tech guy, and HR, and personal assistant, and head honcho, and intern. You could use another pair of hands, like the experts you'll find at Verizon Small Business Days, April 21st through 27th. Get a free tech check, special deals, and more. Call 1-800-483-4428 or visit verizon.com/smallbusiness to book your appointment. Verizon Business.
Reality radio for a really great future. We're talking real money.
Look at that. Another week, another French Friday comes. I'm Don McDonald. Welcome to Talking Real Money. On Fridays, for at least the next few weeks, we are joined by Ken French, a professor from Dartmouth College and a director at Dimensional Funds, with some pieces he recorded explaining various things about the investment markets. And his explanations are so on point, and they're really easy to understand and relatively short that I thought it would be a great idea to share these. These were originally recorded as videos, so they have an annoying music track behind them. At least I find music tracks behind spoken word videos to be kind of annoying, so I apologize for that. But Professor French has a unique perspective on risk and how you need to think about risk when it comes to managing your portfolio.
Risk is a confusing concept for many investors. Some think it's the probability that the value of an investment will decline. Others argue it's the volatility of their whole portfolio. Many finance professors, including me, define risk as uncertainty about lifetime consumption, with consumption defined broadly. The consumption I'm worried about includes everything my wife and I spend on ourselves during our lifetimes, and it also includes gifts to our kids, political contributions, charitable donations, and bequests we put in our wills. An investment that increases the uncertainty about my lifetime consumption is scary. Suppose I'm considering borrowing money to invest in the stock market. Since that would increase the uncertainty about my lifetime consumption, I won't make that investment unless I think there is a really big premium in the expected return. Fire insurance on my house reduces the uncertainty about my lifetime consumption. This is one investment that I hope will not pay off. But if my house does burn down, I'll be glad I bought the insurance. Since the insurance company expects to make money on my policy, I know my expected return from the investment is negative, but I buy it because it reduces the uncertainty of my lifetime consumption. The failure of Enron in 2001 illustrates the power of this broad definition of risk. Many employees at Enron had most of their retirement savings invested in Enron stock. If we consider just their retirement portfolios, the lack of diversification was bad. But if we consider uncertainty about lifetime consumption, their retirement portfolios were really bad. The employees had their income and their wealth in one basket and ended up losing both their jobs and their retirement savings at the same time. The implication for the rest of us is clear. Consider your income and other sources of wealth when you build your investment portfolio. More generally, when you're trying to determine the risk of any investment, think about its impact on the uncertainty about your lifetime consumption.
That whole Enron story illustrates our reticence to own individual stocks. Because when you own individual stocks, you take on this gigantic risk of losing everything. And as he mentioned, as Professor French mentioned, if you own the stock in your retirement portfolio at work, the risks are even greater. I mean, you're already at risk just working for a company that goes bankrupt. But when you own them in your retirement portfolio, as so many Enron employees did, you put a huge part of your life in jeopardy. So that's what we're talking about when we tell you you need to diversify away this risk. But I love his take on risk, that it's really about your lifetime spending and the fact that you're putting your future at risk. If you need help trying to figure out what your portfolio looks like, because I know a lot of you have these hodgepodge mixes. You have company stock and you have all kinds of weird investments, and you've got an IRA over there and a Roth over there and a brokerage account over there, and you're totally confused. I can understand it. That's why Tom and I, when we started our firm Vestory, we wanted to educate everyone through our radio show, podcasts, newsletters online, all that stuff. And we also decided to make our advisors, who are fiduciary advisors, all fee only, available to anybody for a little bit of help. No, we will not manage your money for free. That would be silly. But we will help anyone who asks. It's so easy. Just go to Vestory.com and click on one of the buttons or fill out the form at the bottom of the page. Just pick an appointment. Pick a time. One of our advisors will meet with you, help you get some things straight, even if you're a do-it-yourselfer and you never plan to have an investment advisor, because we find that even the do-it-yourselfers get tired of giving advice to folks who really do need help, and they recommend us. So it works out. It works out. We don't have to pound you with a high-pressure sales pitch because, well, honestly, we don't need to. So go to Vestory.com, make an appointment if you need one. Go to TalkingRealMoney.com and send in your questions on the contact form, or give us a call 24 hours a day, 7 days a week at 855-935-TALK. And remember, every Saturday, we're on the radio from 3 to 5 Eastern or noon to 2 Pacific time, taking live questions at 855-935-TALK. That's every Saturday, including tomorrow, 855-935-8255. Tell friends about the podcast, about the show, about all the other stuff. Thanks so much for listening. I'm Don McDonald.
Talking Real Money. We hope you realize that the information provided on Talking Real Money is for educational and hopefully enjoyable purposes only. Providing personalized financial planning or investing advice takes time, so please consult with a really good fee-only fiduciary investment, tax, or legal advisor. We know a good one. Investing must always involve risk. In other words, you can and probably will lose money at times. Also, as much as you want it, no one can accurately, consistently predict the future. So past performance doesn't tell you a darn thing about what the future will bring. Unlike many other programs that say something similar, Talking Real Money is not trying to get you to buy or sell any financial products or securities. Instead, the program is provided as a public service by Vestory, a fee-only registered investment advisor. Thanks for listening, and please visit TalkingRealMoney.com for more information and disclosures. That should keep the lawyers happy.